Friends, welcome to Yadnya Investment Academy. In this video, we are going to study what are balanced funds. The video has been updated in line with categorization and rationalization of mutual fund schemes brought in by SEBI, and another is in line with long-term capital gains tax imposed on pure equity and equity-oriented mutual funds. Earlier, there were no clear category definition that was laid out, and its characteristics were also not defined. And so a lot of mutual fund categories were very vaguely defined. But now SEBI has defined these categories. SEBI has defined 10 categories within equity, 16 categories within debt, 6 categories within hybrid type of schemes, 2 categories within solution-oriented schemes, and 2 categories within other type of schemes. Earlier, mutual fund houses could have multiple schemes within the same category, and so a plethora of mutual funds available in the market for investment made it difficult for the investor to understand the difference between all of these schemes and choose one for investment. And so, now to make the investor life easy, SEBI has permitted only one scheme per category per mutual fund house, except a few exceptions. These exceptions are that sectoral and thematic funds in case of equity could have more than one scheme from a mutual fund house. None of the debt, hybrid and solution-oriented schemes could have more than one scheme from one category from a mutual fund house. In case of other type of schemes, the two categories that are defined are index funds or ETFs replicating tracking different indices. Another one is fund of funds. So both these categories could have multiple schemes from a mutual fund house. And so, in the light of category list provided by SEBI, mutual fund houses were required to analyze each of their existing schemes and see which of their schemes fall in which category. If there were similar schemes within the same category, they were asked to merge these categories so as to have only one scheme per category, except a few exceptions we discussed earlier. SEBI has also defined scheme characteristics for each of the categories, and so mutual funds would now have to strictly adhere to these characteristics. The intention of telling you all this is that earlier even balanced funds were very vaguely defined, wherein balanced fund was something that was an equity oriented scheme which invested 65 to 80% of its total assets into equity and equity related instruments and 35 to 20% of its assets into debt type of instruments. But now, as the scheme characteristics as well as the category of schemes is defined by SEBI, your same balanced funds are now called as aggressive hybrid funds, because aggressive hybrid funds are the funds that invest 65 to 80% of its total assets into equity and equity related instruments and 20 to 35% of its total assets into debt type of instruments. So don't be surprised if you get a notification saying that your balanced fund is now an aggressive hybrid fund. For example, HDFC Balanced Fund and HDFC Premium Multi-Cap Fund has been merged to form HDFC Hybrid Equity Fund, which is nothing but an aggressive hybrid fund. So now, based upon the SEBI circular, balanced hybrid funds are the funds that have 40 to 60% of their total assets into equity and equity related instruments and 40 to 60% of its total assets into debt type of instruments. No arbitrage opportunities would be permitted to be invested in case of balanced hybrid funds. A mutual fund house could either go for a balanced hybrid fund from its fund house or either for an aggressive hybrid fund. A fund house cannot have both these categories. So from a taxation perspective, as balanced funds would never have more than 65% of its total assets into equity, these funds would now fall into the debt category as far as the taxation is concerned. And aggressive hybrid funds would fall into the equity category as its minimum allocation to equity is 65%. So we spoke about the kind of portfolios balanced and aggressive funds have as far as the equity and debt allocations are concerned. There's another type of category in hybrid funds called as conservative hybrid funds, which have 10 to 25% of its allocation to equity and 90 to 75% of its allocation to debt kind of instruments. So be it any kind of fund among these three, be it balanced, aggressive or conservative hybrid fund, The equity portion of their portfolio gives it an opportunity for high growth, and as equity and debt move in the opposite direction, the debt part of the portfolio gives it a safety net when equity fails to perform. Aggressive hybrid funds, known as balanced funds earlier, have given returns of 10.63% on a per annum basis on an average in the past 3 years. These funds have given returns of 16% on a per annum basis on an average in the past 5 years. So good funds have given even better returns. This data is as of May 2018. But a realistic expectation from these funds should be 9% on a per annum basis post-tax. You should go for investment into aggressive hybrid funds or balanced funds when your investment duration is 3 to 5 years, and that is the precise reason why we have shown returns of past 3 years and past 5 years for these funds. As equity allocation in case of aggressive hybrid funds would be greater than or equal to 65%, these funds would be treated as equity funds as far as the taxation goes. And so, if you hold on to these funds for less than a year, the returns earned would be taxed at 15%. Long-term capital gains tax has been imposed on pure equity and equity-oriented funds starting 1st April 2018. So if your investment duration is more than a year and you're redeeming your investments on or after 1st of April 2018, whatever gains you make above 1 lakh rupee would be taxed at 10%. Now this 1 lakh rupee is for the year of redemption and not for every year of investment. In case of balanced funds, as your equity allocation is not more than 65%, these funds would be taxed as a debt funds. So if your funds are balanced funds and your investment duration is less than 3 years, your returns would be taxed according to your tax slab. If your investment duration is more than 3 years, your returns would be taxed at 20% but after indexation. If you want more information about indexation, please watch our video on this topic. Let us now talk about advantages of hybrid funds. Now these advantages are same for balanced funds, aggressive hybrid funds and conservative hybrid funds. The first one is rebalancing. Let us say you invested 100 rupees in an aggressive hybrid fund where the strategy of the fund was to keep 70% of its allocations to equity and 30% to debt. So 70 rupees of your 100 rupees was invested into equity and 30 rupees were invested into debt. As equity performed better, your 70 rupees became 100 rupees after some time. And your debt portion wasn't doing really well, so it stayed at 30 rupees. So, in terms of allocation, now your equity portion is 77% of your portfolio and debt portion is 23%. So, this fund manager does a periodic rebalancing where he sells off whatever portion has gone up. So, in this case, equity has gone up. So, he would sell a certain portion of equity to bring it back again to 70%. And whatever profits were booked, he would invest into debt to bring it back again to 30%. So this is what is called as rebalancing. So in case of hybrid funds, rebalancing happens automatically of your portfolio without you having to worry about it. Another advantage is switching. Now there's a certain range of equity and debt allocations these funds have to follow. So if equity market is doing good, they would increase the equity allocations within the specified limits, and if debt market is doing good, they would allocate more funds to debt instruments within the specified limit, taking advantage of the market conditions. So this automatic rebalancing and switching of your portfolio brings down the overall cost of portfolio management, making these funds very cost effective. These funds are truly diversified as you're investing your money into two asset classes and not just different instruments of the same asset class. So friends, in this video we have studied what are aggressive hybrid funds and we've also seen what are balanced funds. We have seen the kind of returns these funds have produced in the past and we have seen the advantages and taxation of these funds. Hope the video has been useful. Thanks for watching this one. Watch this space for more such topics. If you have any questions, do let us know in the comment section below our videos, and if you like our videos, please do subscribe and share. Before we end, we want to let you know that Yadnya Investment Academy's first book, which is a collection of 108 questions and answers on mutual funds and SIP, can be bought on Amazon, Flipkart, etc. And the link to buy the same is mentioned in the description of this video. So see you in another video. Until then, happy investing.